Today, ladies and gentlemen, passive income investors alike, we're talking about credit, loans, leverage, anything you can get from a bank because they really don't want to give it to me. But I'm going to tell you about my own personal experience with a meeting I had trying to get some line of credit yesterday with the bank to either buy an online business, a piece of real estate. I don't know. I'm just trying to learn what I can do because I have a six-figure dividend portfolio and I don't want to pull off of that if I don't have to. So why not spend the bank's money? Let's jump right into it. Welcome back, passive income investors alike. Today, I'm excited. A lot's going on. I'm learning some new things that are expanding my world of understanding when it comes to finance, investing, and everything else in between. The dividend portfolio is on fire today. I'll show you a quick clip of that just to give you guys a bit of an update as we sit around $112,500. We're on a bit of a rally in the markets, and I've been looking into expanding beyond the investment portfolio because, like I said, I've had to pay taxes on my income, and then when I pay the taxes, I will then go and buy stocks, and then the income I make from those stocks, I have to go then and pay taxes on that. Mind you, it's not as much, but you still have to pay a form of income tax depending on how much income you're making. But in my world, I'm trying to find a way to not pay as much tax as possible, but increase my cash flows without losing what I already have. But the problem is I'm going to be paying about $25,000. I have about $25,000 income this year that I'm going to have to pay taxes on already from the gold that I sold at the beginning of the year, plus my own income. Like, a lot of this is adding up just into my savings. So I've been trying to find ways to defer it by investing more into my business, getting my name out there more, because if I lose that money, the government doesn't take it, and at least I'm getting a better rep for myself and I'm learning some new things. But realistically, I want to find things that are going to cash flow. I only want to invest in things that might give me some form of a return. And lately, I've been looking into things like real estate. I've been looking into things like online businesses from Empire Flippers, and I've kind of come up with a plan and or a solution depending on how these next few days go. And I'm going to break this down step by step with how you go about getting a loan from a bank or a credit card, because many of you probably don't understand the process behind this, and a lot of you probably get denied, and you understand why in Canada it is very hard to get any kind of mortgage or line of credit, even if you are a millionaire, which is crazy. So I'm going to tell you my own personal experience right now about going to the bank. So the first thing I had to do is I called them up, or I went in and I said I need to make a meeting with my bank advisor because I'm looking to open an RRSP to try and divert some capital, because as I've told you in the past, I found out that a retirement savings plan, though you can't withdraw on it early without paying penalties, you can contribute to it tax-free, so you don't pay tax on the income you put into it. But what you can do is up to $25,000, you can get a credit line off of it and use it to buy a mortgage or fix up your first piece of real estate. And I'm kind of learning the ins and outs of that because I think you can't buy a rental unit. You have to live in it for a year. But honestly, if I had to play that game where I had to live in it for a year to utilize that income, it might be worth doing just to get that benefit. But when I went into the bank, she told me already I wasn't going to approve for anything. She just looked at me and said, "You're not going to get anything. It doesn't matter that I have almost a $10,000 car that I own sitting in the parking lot. It doesn't matter that I have $112,000 sitting in the bank. It doesn't even matter that I actually claim that I make $30,000 to $40,000 a year. After taxes, it'll be closer to like 25, 30." She kind of just laughed me off and said, "We can give you a credit card. You want a credit card at 20%? We could probably give you about $7,500, maybe $10,000 if you're lucky." And I'm just like, you know what? I don't want that. I said, where do I have to play in to get a line of credit? She says, you have to make $40,000 a year worth of income. And in my mind, I don't want to play that game. I really don't want to show $40,000 worth of income because then I'll be paying about 18 to 20% on income tax on that with HST and the 5% income tax itself. That is a substantial amount of money in my eyes, considering even on the $30,000 I claimed last year, I ended up already paying about $10,000 with everything into that, and that was already mind-blowing enough. And I'm trying to avoid paying that $10,000, but I told her, I'm like, why is that? I have income, I have assets, I can't get a line of credit from you. She's like, no, just go make more money, come back, maybe even another day, who knows. So I was a little discouraged, but not really, because why? I'm educated. I'm going to teach you something that I learned from realtors, which was amazing, that you don't have to listen to one person's opinion. There are multiple options out there, guys, and the banks are there to want to give you money. So sure enough, I'm like, I'm not going to take one person's opinion on this. From all these realtors telling me, call around, see what you can get, because there's usually somebody that's willing to give you money. So I called up the Royal Bank. Royal Bank answers, and they said, no, we don't base line of credits off just your income. We want to prove that you have income, of course, but we look at the whole picture, is literally what the guy told me. He's like, we're going to look at your dividend income, we're going to look at your assets, your car, everything else. And they didn't give me a better solution, well, a much better solution, but it's a heck of a lot better than what she was talking about. So the Royal Bank, after I called them, told them the same spiel. I'm a young guy investing into my business. I don't want to pay as much tax. You can be honest with people. You know that, right? It's crazy when you can just tell somebody straight up, I want to divert income. I don't want to pay income. I don't want to pay income tax. And I really just want to keep scaling my cash flow, but I don't want to do it with my investment money. So the guy at the bank looked around a little bit, told me what I have to do, and I have to come up with some T4 slips and prove that at least in the last 2 years, I've made at least $20,000 worth of income plus my assets backing that up. And on top of that, they're going to give me a $7,500 line of credit at 10%. Doesn't sound like a lot. That percentage is way higher than I want it to be, but luckily it's with a smaller amount of capital. And what he told me is in 3 to 6 months, he says it usually takes 3 months, you can come right back after you get that line of credit and we can actually increase it. So it's how you actually start building your credit, because I know I will never be able to get a mortgage with my income without a cosigner or at least enough assets to literally back it up or pay for most of it, which is really annoying unless you go through a private deal, which is another thing I've learned from realtors, guys. You can actually finance a private deal with a private person if they are selling a house privately. There's a realtor that I watched that literally bought a house with zero down at a 4.3 or 4% fixed rate for a 35-year mortgage, just completely privately, immediately rented it out and started cash flowing and paying it back. But that's kind of a lucky set of circumstances. For me, that ain't gonna happen. So what I planned on doing, because I know I'm not going to get a line of credit, like a large line of credit, like 50 or 100 grand, which was expected. Honestly, when I walk into these situations, I kind of think about what I want, and then I figure out what they want, and then we try and meet in the middle and get what I can. And currently that's going to be, I think, about a $7,500 line of credit at 10%, which is a good start. And I might use that money as a down payment on an online business. I don't want to use all of my personal money if I do end up purchasing an online business. I'm also going to do a talk with them today before I post this video. $7,500 isn't enough to get me a whole lot. It's not going to get me a piece of real estate, and it's certainly not enough to buy an online business. But what it is it's a down payment for an online business. I'm going to be calling or dealing, I'm doing a meeting with Empire Flippers today, and I'm going to tell them kind of what I'm about. And it's going to take a few months for this to come to fruition, but I'm going to see if they do any self-financing either. And if Empire Flippers is willing to finance at a reasonable rate, not like 10%, but hopefully a lot lower than that, I'll use the credit for a down payment, because I think usually on a $50,000 business, you need usually about $3,000 to $5,000 down, which isn't terrible. But like I said, I don't want to use my own money, so I'm going to take that $3,000 to $5,000. I'll probably use it for the down payment. I'm hoping as much financed as possible to an extent. I would put maybe about $25,000 into the deal myself. I want to leverage about 50% of it, so part of it on the down payment and hopefully the rest of it financed through Empire Flippers themselves. And then what I would end up doing is dumping some of the rest of the money that I have into my tax-free savings account, and then I would write off the entire business that I bought as a business expense, and that would stop me from paying HST, and it would stop me from paying income tax on that $25,000 plus everything else that I make this year. I will redivert into my RRSP, and that way at the end of the year I will be paying zero tax. Of course I will have some debt, but that debt will come hopefully with an extra $1,500 to $2,000 worth of cash flow. And I've run some numbers. If the finance was around 4 or 5%, I would be making usually between $8,000 to $1,000 extra a month after paying the loans back. And that's at a 5-year rate, because I don't want to, I might even flip this business back if I can build it up. I might even sell it back to Empire Flippers, or if I like it enough, I might just keep contributing to it and growing it. But the end game is 5 years. When I look at these loans for an online business, I don't want it for more than 5 years. Not that I don't want the business for more than 5 years. I just don't want the loan for more than 5 years. So I look at it as how much do I have to contribute every month to pay the debt and also pay the loan down enough that it's going to get paid off in 5 years at least. So that would be the end game with that. Now, looking at my actual accounts, because you guys see all of these money in my dividends accounts, you're probably, or my accounts that I'm using for dividend income, and you're probably thinking to yourself, well, what are you going to do with that? Well, an online business, because there's a little more risk to it, your income, your cash flow is a lot higher. you are getting, like I said, I could automatically on a $50,000 investment start cash flowing. If I just pay it out of pocket, that 50 grand, I could cash flow around $2,000 a month. Not a year, a month. That means you're gonna be generating about $24,000, $25,000 in income a year off a $50,000 investment is crazy, isn't it? Isn't that crazy to think? But with those dividends, guys, in my dividend portfolios, the problem, like I said, I don't want to pay tax on that one account. So I'm really going to start focusing on my tax-free savings account and re-managing it, because though I'm comfortable holding almost $20,000 in Apple and $20,000 or $17,000 in Northland Power in my really large positions, I'm comfortable holding those scaled positions because to me the scale doesn't really matter to an extent. But now that I'm trying to find a way to keep my dividend income up and find some other diverted ways of not dealing with the tax man, I found out that I've realized that I'm better off kind of diversifying my TFSA, my tax-free savings account, and maybe leveraging down in Apple and trying to divide it up between all the companies I like in this account and the account that I have to pay tax on. I want to take all of those companies and find a way to slowly start leveraging down in Apple and all my really large positions and buying those higher yielding dividend stocks that I really, really love. And I've kind of put a little map together, which I'll show you because it's up here, but maybe I'll pan over. I kind of like formulate in my mind, I write down and I figure out what would give me the highest dividend yield versus what would give me the most comfortable allocation for the stocks that I like, because I need to be getting somewhere closer to that 5% dividend yield at least. And I don't want to get less than that. So holding Apple and those companies, if I were to sell off that part of my portfolio, I wouldn't be getting nearly as much. I just wouldn't be getting as much in dividends, and that would hurt me. So I still want enough of Apple that I enjoy owning it because I need enough to make a difference, but I also need those dividends. So I'm going to find a nice way of balancing all of this out. So the 2-year plan. So we've learned, guys, you can't just talk to one bank. Talk around all the other banks. Figure out what you can get. Don't get credit cards. I only ever use that credit card I showed you in the beginning because it gives me 2% back on some of my purchases, 1 to 2%. So what I'll do is I'll use that for all my business expenses. It usually pays me a couple $100 a year, and it covers most of my expenses in my my bank account. I usually look at it as it covers my bank account expenses, just like for holding the accounts or whatever. So that's what that's for specifically. But really, I only want a line of credit, and the only time you should really be getting credit from a bank isn't for a car loan, isn't for any of that trash that loses value. It's only for things that go up in value over time, and only when you have enough assets to back up that credit. I am not like one of those realtors that'll take out $5 or $10 million in debt but only have about $1 million or $2 million in actual asset in the equities themselves or in the assets. So that might have sounded a little confusing statement. So the problem with a lot of people, and a lot of people are comfortable with debt, so they'll take out as much mortgaging as they can into properties to try and get cash flow going. But I find they end up doing is something that I don't even like looking into balance sheets when I see it. It makes sense. So say you had $500,000 that you owned of a property, but you were leveraging it and you had like $2 million levered out. So if the bank ever called in that $2 million, that $2 million is a lot higher than the $5,000 you have in equity in the house. That's what caused Dave Ramsey to lose his shirt back in the financial crisis. I don't enjoy seeing it, and I never want to leverage more than about 30% of my overall investments, which means if I have $100,000, I wouldn't be comfortable leveraging out much more than 30 grand of it. So long as it's in something that I understand and I'm comfortable enough understanding so I don't lose the money. That's always kind of the game, is try not to lose it. Which leads me to question, what do you guys have leveraged out? Are you leveraging credit cards out into student loans or anything? Do you got any kind of debt whatsoever? And I want to know how you're utilizing it in the comments section below. I find this topic really interesting, and it's changing the way I'm looking at my entire portfolio structure, because in the beginning I was all about dividends, improving dividend income and just growing that, and I figured, that's it, my life's over. I got complacent. I'm like, I don't need to do much else. I'll just work, contribute to dividends, keep adding $1,500 to $2,000 a month, and bam, by the time I'm 35 I'll have enough dividend income to cover most of my expenses. But then at the same time I'm thinking to myself, yes, but look at all the taxes I'm going to pay. I have to prove some form of income if I want to get into real estate. It just becomes more and more challenging as I've been going down the line. So I've come to the realization, why not try and just educate myself as much as possible, see how much I can defer my income, save $50,000, $100,000, $150,000 in taxes over the next decade. I'll be able to put that into more cash flowing businesses, and who knows, if I educate myself enough, I might even be able to get my cash flows up enough soon enough that I might not even, the dividends won't matter as much. But I like the dividends of my TFSA. I don't want to screw around with that. That's tax-free money. It's the best account I've ever seen in my life, and I love it very much. I will let you guys know, and I will keep you updated. You can always come back to this channel to see what I am doing with this portfolio and how I'm managing it. And I'm also going to add to the end of this video the conversation piece, and I might update what Empire Flippers might let me do for financing. Whether I get that in this video or not, it'll be at the very end, which is pretty much now. So if I add it to the end, you'll know why. It's because I had the conversation before I posted this. But we'll see how that goes, guys, and I'll let you know. It's a very fascinating topic to me, and I think this is super cool and interesting. So I hope you guys will stick around for my FIRE independence, my financial independence, retire early journey that I'm sharing with you guys, and the quirkiness inside my head that I can't just get complacent and sit still. I have to be on edge all the time. So stay cool, guys. Stay awesome. I look forward to chatting to you real soon.